Hi, Warriors. Let's have a great FOMC day. Plus, we have some inflation data to contend with. AJ, how are you? Michael Weisman, James Groom, Kman, how you doing, buddy? Sinatra, Kurt, yeah, almost at all-time highs. So, just saw the similarity team with Canada, pretty weak flag, and Dixie still could be a flag unless it takes out Blake's neckline up there around 104.30. So who's in the house with me today? We have Brian and K-Man today, so we're at full strength. Good morning, Ryan. How are you?
I'm very good, thank you. How are you, mate?
Good, buddy. So pretty weak rally in Dixie so far. What do you
Yeah,
think?
treading water, I think, mate. Everyone's just
Yeah,
treading water, waiting for
yeah,
the big event later.
yeah. Was this like a flagpole, and this just a little bare flag? And Canada even looks a little weaker than the dollar. So I guess everything could happen though with the Fed.
Yeah.
So, charts don't mean as much prior to this stuff. So,
Apart
you know,
from picking your levels, you want to trade if you get a move. That's what
after
you want to
all
be doing.
after all the stuff, do you trade your levels now? Because people could say 136 is a level here
Yeah,
on Canada, but between the inflation news and the Fed,
you don't
we
touch
get
it.
over this resistance. Maybe it's got another 100 pips in it.
Exactly, exactly. So if your next level's that 200 moving average, well, then
Yeah,
you wait for the Fed, you wait for the details, and
right.
if it breaks, you sit back. If it doesn't break, then you have conviction for trying to short there.
It does kind of look like we've gotten a nice turn here in EG. It looked like it was trying to. Blake was buying it last week.
I
Um,
just sold it this morning, but yes, I was.
so, how many people that you work with remember your trades from a week ago?
Dale, I don't even remember your last name from yesterday. So
From this morning.
I don't know how I do because Blake, sometimes I walk into a room and I'll ask myself, why did I come in here? But
where
but
did
I
I
can.
where did I leave my glass of water?
Yeah, why
you,
why did I decide to come
you only
here?
need to worry, Dale, when you get an answer.
Yeah, oh,
Well,
yeah. I
but
tell you what,
Dale, I will say you have like a sponge memory when it comes to talking about trades. And that's evidence that you've been in the markets for a long time and you watch price. And that's I've obviously done these shows for a long time and traded for a long time, and I always tell people when other people are BSing you because they don't remember the numbers. They're like, well, I think it was up here, and it's like, yeah, you weren't
yeah,
in the markets. That's one of the reasons why I always have like a hand in the market, even if it's just a small hand. I have some sort of
yeah.
position going because it keeps me engaged. And I know that you're trading, you're engaged, you see the
Yeah.
numbers, you know where everything's at, you're watching everything carefully. That speaks from experience. And
I remember the first time I interviewed you on FX Street. I asked you if you ever were ever flat, and you came back never. And that you always have a toe in the market, and so you know,
I do.
uh,
Even when I'm
yeah,
on vacation, I usually have something going on just to keep me engaged. So
yeah,
anyway,
yeah,
but
yeah. People say, do you carry positions over the weekend? And I go, yeah, I can't relax unless I have something to worry about. So anyway, we have inflation expectations. How you feeling, K-Man? You back in the
Hey
saddle?
Dale, yeah, I'm better, thanks.
Good.
Getting better.
Yeah. Well, good. You're snapping back. What do you think? I know you follow silver, and
Yeah,
normally I'd ask Stell, but he's in
yeah.
Italy. What do you do after a decline like this to recommit to the trade? Is there anything that you're paying attention to, levels that you would buy it? I mean, I thought 2250 a week ago
Yeah,
was, how
I've
were
got
we going to see that again?
I've got levels between 22 and 22 and a quarter where I may start to very shyly add
Yeah.
to what I let go earlier in the rally of my really long terms.
Yeah.
But still will leave room because we are this end of year, and I don't really like to initiate a lot of new in the long term stuff right into the end of the year, unless we get like an extreme down back into the 20s where I'll probably load up the boat again. But and it's going to be very, very shy ads if I do anything at all in the next couple of weeks. And it'll depend how we get out of this, and not only the FOMC, but the whole lot of all the central banks coming up in the next 24, 36 hours. That's going to be dependent on that. But yeah, I mean,
Because
anywhere
we
in
are
the,
about 61.8 back at 22.64.
yeah,
Just saying it hit a,
yeah,
fiddler that a lot.
we went there, but I'd rather have the FOMC at least out of the way before doing anything, and I'd rather pay up instead of buying
Right.
it now and then looking at 22 the figure afterwards,
Yeah. Yes, I've done that.
And gold is a bit the same. Could be enough here. But then who knows? We could do that last little bit, and I have your 61.8 there in the just below 1940. I showed that on the flow show to 30s, 40s is where I'm probably going to get quite interested.
And look at where we talked about that. I think it was last week when you were probing the long side of gold. I said, well, that's a great one to be long, even though that came down, but not as much as silver. And here we are right back at this last major resistance level on the gold silver ratio. That's a pretty good move. So in a short period of time, tough, people thought they had it and the ratio was going to go to, 65 or so. And so I think this is important too. Most bull markets happen with this going down, not with this going up. So just something to keep in mind. Any vibe on yen today, Kman?
No, that is one that I gladly will leave alone. Unless we get like a fierce sell-off, unwarranted sell-off, and then I may try to catch a knife. But no, this is one that I'm not very tempted in right here and now.
Okay. And let's see, oil collapsed. It has been collapsing. Every support level has, given way. Should get some type of bounce here in oil, but I drew this line a long time ago. You could tell because it's not even extended out to where it could go. And this is like, low 60s, 62-ish, but maybe we get a bounce first. I think the OPEC meeting is over. I was reading on, you get great news here. We, post what Life Squawk puts up on, so you could get the news, and there's a lot of OPEC news here, so maybe we get some type of bounce. But, I was thinking about it, and I know it's only temporary, but is it really a positive thing for crude to be collapsing, for silver to be collapsing? Commodity markets in general under pressure, dollar hanging in there. As an economic sign, it's not that great. I mean, copper has been on both sides of this. I don't know. What do you say about copper here, Blake? I mean, we had a breakdown, then we negated it. Now we're back here.
I think it's a tough read, but then again, I think the global economy is a tough read right now. Everybody's, that's why I think the recession call has been so hard on people, and it's also why, the Aussie's been so tricky around here because everybody's like, wait, China's doing all of this, and they're just constantly doing little spray type of effects to boost, you know, the world's largest economy. I guess, are they the world's largest economy now? Anyway, you know, it's China's just you know, it's just sputtering along, but you know, people feel that it might turn, and you know, with everything in the U.S. economy not slowing down, perhaps we'll get out of this alive. And so I think, and then you know, I think it's just being, like I said, torn in like two different directions, but it's not indicative. I think the rally that you're seeing in copper, or I'm sorry, I should say that differently. The move, or the way that copper is just acting at these levels isn't indicative of an economy that's going to continue to explode globally. So you know, I think it keeps people's longer term expectations of the global economy and you know, potential slowdown going into next year really alive when you look at, you know, the move in copper, where it's just not able to rally. So I don't know. I think it's a tough read though.
Yeah, here's a couple like I don't know, industrial stocks. I mean, Deere and Cat. Deere, you know, with the strength in the rally, here's something they're not rotating into yet. And
Yet,
then
yeah.
here's Cat, still quite a ways away from the August high. So, you know, still been the Mag 7, buddy. A lot of it's still the Mag 7.
It is,
So,
you know, and I think that chart, I think we showed it here yesterday, the show of rotation
yeah,
out of the Mag 7 into different stocks. That is something that we saw, you know, a couple years back, you know, post COVID, when you know, we thought all the technology stocks were done. And you know, when Microsoft initially made its, you know, first peak following you know, the COVID recovery, you know, the rest of the markets picked up the slack and started to make a move, and we're seeing that today. And that's the thing that really makes me hesitant about being too bearish risk here, and especially given the fact that here we are today facing the Fed, and the Fed's probably not going to give us a lot of pushback. I think the general consensus is that you know, from economists, is that you know, the loosening of financial conditions is going to make it very difficult for the Fed to, you know, eventually get inflation below, you know, their mandate at 2%. But I don't know if you know, Powell's going to, you know, pour cold water over the markets right now at this stage in the game, especially with you know, the labor market, you know, showing strength, but not like, you know, not showing any cracks of like serious weakness right now either.
you know, I found out what caused these gaps in some of the MAGA stocks on Monday.
You
After the
shorted them?
fact. No, I found out
No, I mean,
Buffett.
you shorted them. That's what caused the gaps.
No,
Oh,
it was
okay.
that Buffett sold 28, I think, $1 billion worth of stock or something. It was reported. So, you know, that's why they sold off, and, you know, Microsoft gap lower. A lot of these stocks, Amazon gap lower Monday and then came back. So Buffett is the news of Buffett liquidating.
Yeah.
So, you know, so people just went ahead and, you know, everyone knows what Berkshire holds, and on Monday on the opening, they just sold it, but the market's come back, to, you know, back to or even above the levels from Monday. But I didn't know that. So, you know, a lot of people pay attention to what Buffett does.
Yeah, and you know, I don't pay too close attention what Berkshire does, but I know that they do have some substantial investments in Japan, and I think that's got to be watched closely, especially going into next year, with all the talk of the BOJ, you know, potentially normalizing rates. You know, you look at the Nikkei. The Nikkei is really starting to underperform.
Yeah.
You know, a lot of European markets, also, you know, obviously U.S. equities as well. And that's something that I think we need to watch going into next year. as we were not able to take out those highs recently. So I think that's a really, really important chart if that's your game. But hey, Dale, I want to show, do you mind if I take the charts for a bit?
Buddy. No.
All right, cool. You know, first of all, I want to say thank you all for being here as we get prepared for, you know, today. And I think today is going to be obviously one of the biggest fireworks that we're going to get of the end of the year. We have the BOJ next week, and we obviously have the ECB and the Bank of England, Norges Central Bank, Banxico, Swiss National Bank, all tomorrow. So don't think that this is it, and you know we're going home, and we're going to get ready for the holidays. There's a lot to happen over the course of the next 24 hours, and B, and we're going to be covering the ECB tomorrow. And do we cover the Bank of England? I forget because of the time change. If we cover that right out of the gate, as we come on to F.A.C.E. Is that it?
No, 12 o'clock.
It's earlier, right?
Yeah, an hour earlier than F.A.C.E.
Right. Okay. So, but the thing is over the course of the next 24 hours, there's so many central banks meeting. We need to cover, you know, everything that's happening. Like I look at the sterling, and I know the sterling's underperforming. I just sold my euro sterling this morning as we hit that previous support. We had pretty much our range extension, and I had you know, some orders to get out just a little higher, but I said screw it, you know, booking profits because Dale, we don't go broke taking profits, and in this case, it was you know, I wanted out ahead of the, you know, two central banks tomorrow. But the one thing I do want to point out is that today's FOMC, I think Ryan, you did a great job in our chat room, kind of preparing people, and I want to show you guys this really quick because I think this is going to be, these are some really important charts. But before I do this, you want to see one of the most active communities in the markets is check out ForexAnalytix. Take your trial today. It's $1 for 10 days. Download the mobile app, get inside of the chat room. This is what the chat rooms look like. Let me pull up the chart for you, or pull up the chat room for you. This is what the chat rooms look like when you're inside of them. You know, this is just our general chat. That's not including the S&P chat room, the macro chat room, which is the Flownomics room, all the, you know, news and research where, you know, we post all of the, you know, different articles and research pieces that you see from Goldman and whatnot and whoever else has them. And our trades room, which is where you're going to highlight, oh, you can see what Blake's open positions are or what other traders are doing. But I want to show you in the general chat room what Ryan did here, which is really important for today. Let me get to his charts. Like these were from like a half an hour ago. So Ryan, talk a little bit about like this is the 10-year. I'm gonna skip over that for a second. Let's take the dollar yen. Dollar yen is going to be perfect for today. Explain this chart that you put in the chat room. And now you did this with all the different, you know, major currency pairs. Why?
Just because it's going to be hard to, obviously, when the announcement drops and the headlines hit, to jump in a trade and pick a side or whatever, and then run it into the press conference. So what I tend to do in these big events is look for stretch points. You know, expected ranges. You know, if we get strong news, weak news. You know, if he's mildly hawkish, what might dollar yen do? It might, you know, rally to 146.50 or down to 145 again. And then if the news is a bit bigger, then there's the red zones are sort of extension points. Those are the bigger, wider areas away from the current price where, you know, the price might run into trouble. And also I use these areas and levels. Let's say that the price action doesn't justify what Powell says. Let's say he's mildly hawkish and the market gets overly dovish and, you know, dollar yen dumps out. Then that's the sort of area I think, right, okay, you've gone too far now, like it did yesterday with the CPI. You've gone too far. That's where I'm inclined to then pick a potential area to counter trade, perhaps. You know, it's not set in stone. The market can go through those zones, obviously, but, you know, experience of trading these things, you get to know how much a market tends to do on these sorts of events.
Like I'm going to tell you guys right now, and this is how I want to play. You know, the sterling. The sterling is hot on my list of shit I want to short today. And I'm just telling you guys how it is. You know, you get the sterling back at 126 to 126.20. I am a seller. And what I immediately noticed by looking at Ryan's chart that he posted here is that if we get into this 126 level, you can see that is like a zone that he is looking at as potential sell zones for the sterling. So the reason why I think this is important is because I went into today already with the game plan. Sterling gets back up to 126. We've had that, we had some data that's allowed the sterling to slip. We got the Bank of England tomorrow. I don't think the Bank of England's going to come out and be necessarily hawkish, but again, these are my biases. So I'm looking for a rally back up to this level to be on the short side. But knowing that Ryan is as well just gives me more confidence that if we see those areas, I'm not the only person looking at these levels to be on the short side. And not only that, but I trust Ryan's judgment because obviously I work with him, but I've seen Ryan work for the last decade in the markets, and I appreciate and respect what he does. So that's the importance of what we do in the Forex analytics community. It's not necessarily you should sell this here, and Blake just bought that and he sold that, so I'm going to go ahead and buy that and sell that. That's not it at all. I mean, you guys can obviously do that, but just following us around in the trades room and go, Blake just bought this and Kman just bought that and DK just did this. You can do that, but it's really getting more of opinions out of what other traders are thinking at this point, especially those people that are very active in the market. So that I just blurted it out. I just let you guys know what my setup is for today. I want to turn it over to Kman really quick because I wasn't obviously able to listen to the flow show. Kman, what is your preferred trade today in the markets, and how do you feel the FOMC is going to? How do you think things are going to pan out today?
Right. So, of course, we will have those dot plots, which may cause a few waves if there's a lot of changes in there. There should be a bit of changes shown for 2024 probably.
Yeah.
Excuse me. Excuse me. But to me, the meeting tonight is really one that where I guess they will make clear that they just stay the course. Some people may find it a fight back against what the market is expecting could be, but for me, it's really there's no reason for them to change anything. We have seen certain areas showing a bit of weakness in the month of November, but then two big pillars, employment and CPI. CPI being a bit sticky, employment defying the laws of gravity. So I think it's just like really, I mean, if I would be at the Fed, I would say like Merry Christmas. We don't change anything, and see you next year. And that may be taken as initially a bit hawkish for the dollar. I am actually still smalls, very smalls, long dollars going into it. Also because we've seen big rallies on the stock markets, and we have seen a bit of dollar weakness in sympathy, but not really too much. So there's a couple of currencies on my radar. There's one in the immediate, which is the cable. Because of those weak numbers this morning, there is euro dollar still 108.30 is still my level where I think that it should cap, but if it doesn't, it may mean something different if they would not be hawkish. And then the last one, and that's going to be a combination between today and tomorrow. That's dollar Swiss, 88.15, 20, 25. That's going to be a magic number on the SMB as well tomorrow. And I'm looking for the SMB to finally tell us that they've bought enough Swiss franc and that they are happy with where things are.
God, I'd be happy with that. Would you play the dollar Swiss, or would you look to play? Because I'm already short Swiss francs through a different
euro,
pair. Yeah. So how would you play it?
I think both can go together. Although we have ECB tomorrow, and I'm not sure about the ECB really, and I'm still not a huge fan of euro as such. And then there's another one, and I've really been doing only like a bit of jobbing here and there. Sometimes not even the time to update the stuff. But dollar rand. I mean, if the Fed is hawkish, I think dollar rand explodes. Really.
And I couldn't agree with you more, Kman. And and this is the neckline of the dollar index. You can see it right there. And I as I told our traders yesterday, I'm like, look, we break above 104.30 in the dollar index, I'm just gonna have to drop everything and start buying dollars. I mean, like, I don't, it's gonna be almost like blindly for me, because when you get in a situation like this, that you're at the end of the year and liquidity is already poor, you can see the gaps in moves in some of these pairs when volatility comes. You start getting above that resistance there, and it's like, what's going to stop? Who's going to get in front of it? And then I look at currencies like you just pointed out with the dollar rand, and it's like, man, this thing is not going down. And what doesn't go down usually only has one other direction to go.
Yeah, and
So,
the news is not good either out of South Africa still. Even yesterday, it had a little bit of a revival, the rand, on those better mining data, but we've already undone it. Yeah.
Yeah. Anyway, well, I think some great looks there, Kman. And by the sound of your voice, it sounds like you are feeling so much better. So
yeah, I'm getting better.
I'm glad to hear that.
Thank you. Yes, I'm getting better.
Cool. Okay, Ryan, we got just a few minutes. What are you? I just showed everybody some of your charts, but which one's hot on your radar today?
Yeah, well, first, thank you for the high praise indeed, and the feeling's mutual. Second, that was a great hat you drew on that prior chart. So to trade, I'm looking at dollar yen. I've got a longer term plan of getting short, so I'm looking at potential hawkish Fed to see that go higher, and then
Wouldn't that be great?
Japan.
Wouldn't
Yeah,
that be
I'd
great
like
to lean into? Yeah.
I'd like the Fed to send it higher, and then the Bank of Japan to give it a final nudge, maybe get us up 147s, 148s perhaps. So I'm waiting to start getting in shorts there. But the other trade I'm looking at actually is euro sterling. I think if we because I'm looking to get long pounds, I'm doing the opposite of you. I'm looking to get long pounds before the BOE, because I think
Really?
they're going to be
Okay.
a bit more hawkish and sticky about wages and inflation. So if pound's hawkish, the dollar will go bid. Cable will likely move more than the euro, so that will mean euro sterling goes higher. So I might get a better level in that. Then I'll hit a short to run into the Bank of England tomorrow. That'll be I'm still long, but that'll be a separate short just for a BOE trade.
So maybe we see the 200 DMA. That might be a bit of a stretch. That's a lot to ask for, but maybe.
You never know.
I guess it's only 40 pips away. It isn't that far away.
Yeah, not that far away.
All right. Well, we got a lot of moving parts over the next 24 hours. Dale, do we have data coming out right now?
Just PPI, nothing important.
Oh yeah, we do have PPI. Shit. All right. So I'm sorry, Dale, while I'm doing this, what's hot on your radar going into FOMC?
The outcome of the dollar, to see if this is bear flag or breaks out over your line.
Okay.
So, I'm paying attention to that a lot, what's happening to the dollar. And I'm not long any metals. I kind of think we're getting close to where there should at least be a reaction in gold, especially if the dollar does take that bear flag is for real.
I have to say that gold still has an A, B, C, D, but we're stopped right now at the 50% retracement. That's right now. So if we can get below the 50 DMA, I think the 200 DMA just comes right into play right after that. So you got, a couple really key levels of support just below where we're at. So thanks, Dale, for pointing that out. I needed to talk about it anyway. Let me pull up the dollar index. We do have PPI. So let me put it on. We have the dollar index to the left here. We have S&P right in the middle. And we have yields to the right, and here's producer prices right over here. We might still get a 1-2 punch because we had some sticky inflation data yesterday. Let's see what the dollar. Oh, shit, I didn't want to do that. Let's see what the reaction is. I don't have any dollars on right now. Oh no, I do. I actually do have some dollars on. I just looked. Forget I just said that. I'm long some dollar max down here, people, but that's okay. 4 seconds. Here we go. All right. Ooh, a little weak.
Slightly weaker.
Yeah, a little weak. Look at the dollar index coming under a little bit of pressure. Maybe we can get the euro back above 108 ahead of the Fed. The stocks love it. Stocks are like, yes, bring in the disinflationary data. But that didn't really last long. That little push above the highs in the S&P. Dollar index little moved. I mean, we had a little bit of a selling come in, but cable recovered just a bit. Aussie's trading near its highs, you know, supportive of the of equities moving higher, yields moving down a bit. But are we going to get too much reaction ahead of the Fed? I doubt it. And today is going to be a big day for the markets, ladies and gentlemen. So make sure that you all have strapped in. You know, put on, you know, get your seatbelts on, get ready for some turbulence because this is going to be a hell of a ride. So don't forget, jump in the ForexAnalytix chat room, jump in the community. This is a perfect time to be involved, to take your trial, because it's 10 days for $1. Come jump in our community so you have a place to hang out today.
You can just stroll in.
You can just stroll right in. That's
if
right.
You can't jump anymore.
Oh, you
right?
can't? Oh, I guess no more jumping. No more
Doors
jumping for
always
Dale.
open.
Used
All
to
right,
be able
guys.
to stuff a basketball, but now I'm lucky if I could hit the net. So anyway, great prep, guys. Came in, Ryan, Blake.
Thank you. Have a good day.
Think we covered the board pretty good. And we were just talking about gold, and we have James Anderson with us today at James Henry and on Twitter, and that's his bailiwick. James, great to have you back. I miss you. We had to skip one rotation. So,
Yeah.
buddy, welcome back. What's top of mind for you? We've had some very wild action, had a huge move in the metals to the upside, and then we had that reversal starting in Asia a week
Right.
from last Sunday. Um, what's more important, the move that we had to the upside or this recent reversal?
I think the move to the upside, I mean, just to have a new nominal record high, some pain above 2100, to have happen, you know, in Asian hours is kind of interesting. You know, you have to kind of question why that happened. I mean, at the time we had the drone bombing and the military blamed the Houthis and then Iran behind it. So it's possible that that was maybe what was going off, but it's also possible that people just saw complacency in a quick way to make a trade and make some money, and so they ganged up long on the Asian side. We'll see if that phenomenon continues in some way or form, fashion. I would assume so, because in a secular bull market in gold, generally the longs win, and so what used to be, and it's still there. You still have the Stockholm syndrome of the gold crowd who, you know, woe is me, I'm a victim crowd, where it's still been the best performing asset in the 21st century. If you compare it versus stock and other asset classes, it's been pretty good. But the woe is me crowd is still around, and they constantly are worried about, quote, Mr. Slammy or whatever stupid nickname they gave that thing, you know, where they think that the, you know, the shorts are always
Call it?
Mr.
Mr.
Slammy.
Mr. Slammy, James?
Yeah.
That's a good one.
It's embarrassing. I can't believe in my sector we got people referring to it as like this monster. It comes out of the woodshed and beats people down. But that's what it's become on Twitter. So Mr. Slammy is what some people have been coined it. But you know, now Mr. Slammy's starting to go upward. So, you know, it's a good thing. I think that was I mean, that'll be a big, when you look back, that'll be something that you remember years from now. Just that overnight pop to 2150, and
You know, we've
you know,
had major turns in Asia. I remember once I was long going into an Asian session, and gold was, I don't know, started going down. It was down 5, then 15, then 20, then 25, and that ended up being the low. It was really kind of a strange session that you can get a major turn in Asia, but it's not the first rodeo that I've seen happen in Asia. So here we are, you know, halfway back. Even if it takes some time, you know, I'm still bullish.
Yeah,
I
I mean, you
think
got
we
to.
could see 1900. You think
Yeah,
that's a
totally.
possibility? Huh?
It's totally a possibility because it seems like a lot of the commodities are melting down. I mean, crude
Yeah,
oil is going
oil.
down. Yeah, I
Right.
mean, only copper is kind of being resilient and gold's somewhat resilient, but it's possible to go down further. What's the 200 days of 1950? So it
Yeah.
wouldn't surprise me at all. It even like even the jump to 2150 on a percentage deviation move. Like if I look back this whole 21st century, it really wasn't that huge of a pop. I mean, the biggest deviation that's happened recently was the COVID ramp, where gold and silver kind of ran up really fast. That those are the in 2023 early there was a big pop as well, but this recent one it only went 5% over the 200-day moving average. So it was just a short-term thing. But like I said, it's the phenomenon of seeing the chart that high, it happening once, it'll probably happen again pretty soon. People
Yeah.
are expecting the rate cuts. At some point, the market, I
Right.
think, 80% in May is saying, and 97% in June. So pretty much everyone thinks rate cuts are coming next year. Vast majority of investment professionals are thinking that there'll be a global recession next year. So gold's going to front run that. Generally, you see gold make the move before we all know that the rate cuts are actually official. So I would expect if it doesn't happen toward the end of this year, maybe Q1, we'll start to see a ramp beyond the 2150 zone.
Okay. The gold silver ratio, here's a daily. So, I mean, during this break, it was,
Yeah.
gold holding up much better. You looking for, I know you pay attention to this, James,
Yeah.
and you've always kind of had more of a bias that people's first purchase of physical should be, have some gold before
Hmm.
they branch out into silver. You still feel that way?
Yeah, I totally do. Especially depending on someone's age and time span, time horizon. And the volatility in silver is just pretty wicked, and sometimes it takes longer than some people think. And a lot of people when they're first new entrants in the market, they think it's going to happen tomorrow, and I'm here to tell them, no, it's not going to happen tomorrow. It'll take some time. So the gold silver ratio, obviously, it's spiked up. It's back toward 87. We'll see if it
Yeah.
comes back in a little bit, but it could bust out of there and go higher.
Yeah.
And
Yeah.
there's nothing saying
It's knocked at the door so many times.
right.
You would think this resistance would be weakening. I mean, look
Hmm.
how many times it did. 1, 2, 3, 4, 5,
Hmm.
and it worked. But here we are again.
Right.
In probably a lot of people's surprise, because everyone's looking for the silver squeeze. So,
Yeah.
are the short squeeze in silver? Are the silver squeeze guys talking about Mister Slamming?
Yeah, of course.
Huh?
Yeah, I mean that's a given in silver. But it's just funny that the gold market uses that nomenclature. Not so much the silver market. It's just there's just a lot of apathy there, which is probably for the best. Yeah, but it's this bipolar thing where all of a sudden, if the silver price starts moving, then all of a sudden it's going to the moon. So
Right.
it's black or white generally there. But the gold silver ratio that you're pointing, we got to get back towards 75. If we can break eventually, when the rate cuts start happening, we start having a real run in the gold silver ratio. That's 75 number. If we break that, then you're probably going to be on a good run for silver
Okay.
at some point. And I would expect next year, sometime first half, maybe next year, we'll kind of test that and maybe break it.
Are you showing any investor interest in platinum?
Platinum has interest. Like there are people who are interested, but it's like single digits of our customer base.
Okay.
If they're interested, they're very interested, and they've usually done a lot of research, and they understand that it's a good value for the long term. But it's a very small percentage of volume overall. So I don't spend too much time talking about platinum on our channel, SD Bullion's YouTube channel. But I do occasionally spend time, depending on the news, if it's important enough. But yeah, as far as the three precious metals, I would say, obviously you want to have gold as your foundation, some silver as well, depending on your time horizon and outlook, and then platinum would be a third possible precious metal owned, especially when it's half the price of gold, right?
Yeah, I mean, I think a lot of people that are in the markets today don't even know that platinum used to trade at a $1,000 premium over gold, and here we're
Right.
trading a $1,000 discount.
Right. It used to be reverse, right? Platinum twice the
Right.
price of gold in 2008. So
Right.
in a commodity bull run, you could have a situation where platinum goes back to parity with gold, and that
Yeah.
that may be next decade, early next decade, that occurs. But it wouldn't surprise me at all to see that happen at some point down the line.
Yeah, it could be a good trade, a pairs trade, where you're long the platinum against gold if you have patience
Yeah,
and
right.
you know, and capital to ride out drawdowns.
Yeah, I mean, ultimately, we're looking at a monetary situation, right? So gold and silver would be the first two, but platinum would be a trade on its usage in industrial factors, and the fact that there's just a deficit running year after year, it seems. So, and the ETFs have been raided pretty thoroughly by China already. China's kind of been stocking platinum for years now, and I think they're doing similar for silver right now because China can't have a situation where they don't have either silver or platinum for their industrial base. So. You know, to see them raid all three of the precious metals in the last decade, it's not been a surprise.
Well, you know, since you and I talked, what was a headwind for metals, this dollar rally has shifted. I don't think we've talked since the dollar broke.
Right.
So view on the dollar, I know you have to keep an eye on it. I know you're long-term bear. Do you think that this next wave is in progress here in the dollar to the downside?
I don't know if it's happening right now, and maybe a little bit more strength relative in the dollar. But you know, as soon as they start rate cuts, I presume that we're starting to kick off the next major bear market for the U.S. dollar. And you know, you could have a situation, and we've had situation for a while now where both dollar and gold go up. But ultimately, gold is going to be the one that outperforms the dollar, obviously, as time goes along. So. But I mean, when you're talking about all the different fiat currencies, the dollar, the Swiss franc, those are probably your two flights to safety at the moment. So the combination of the two would probably be the fiat currencies that you might hold for the short term.
You know, I was shown a chart a couple of years ago. I forgot who the guy was, but he showed a chart that every bull market in silver, like you were talking about gold, could rally with a strong dollar. But silver needs a bear market in the dollar to have a bull run. Do you ascribe to that?
Yeah, that's true in terms of recent history, right? I mean, even the 70s and as well in the 2000s. I mean, secular bear market at $1 was bullish for gold and then eventually silver, and that'll be probably the same case here. What you want to see is gold break out and make a run toward 2,500, and silver will start to strengthen, and that gold silver ratio will start to drop, and we'll get below 75 and make a run for silver and gap that gold silver ratio down into the 60s, hopefully. So yeah, that is not that is something I prescribe to for sure. You're going to need a secular bear market in the dollar for silver to really rally.
Okay, and you know, stocks have been rallying with metals. Not they didn't come off like they did. I know a lot of people buy this stuff because they're afraid of financial assets. That they think that there could be, you know, problems in a big bear market and bonds are going to be worthless. Does it bother you that there's no differentiation between what's happening in, you know, everything goes up together and everything goes down together? Have you noticed that?
Oh yeah.
It's all one market. Do you ever think we'll see differentiation where, you know, you could have a strong market in gold and silver and other financial assets are not performing? Isn't that
Yeah.
what the long-term case for gold is anyway?
Sure. If you go and look at a huge, like, long-term chart of the gold to S&P 500 ratio, for it to be at parity 1-to-1 is pretty common. It happens a lot, and there's times where gold is far outweighs and outprices the S&P 500. So, for instance, in 2011, I believe it got down to like 0.7, and you know, right now it's, you know, S&P's more than twice the size of gold, right? So for it to get back to parity is not going to be surprising. I think, pretty sure there's an analyst on Bloomberg who's constantly beating the drum. Mike, I forget his last name, but he's saying that S&P 500 could go into a major bear market back toward 3,000, and gold would be at 3,000. That's where he sees the coming 1-to-1 parity.
That's
so
interesting.
Yeah, I mean, that would be a major shock to see the stock market down 33% at 3,000 and see gold at 3,000. But that's more or less what the large macro, you know, chart looks like when you look at it on a long-term basis. It going back to 1-to-1 is something that happens a lot in history, and usually when that's occurring, gold's in a bull market and it does it. It goes beyond the S&P 500. So
You know,
you
I
see it go back.
remember when I was a baby in the market in the 70s. That, you know, where I used to go work out in LA, there were stockbrokers, and I was, you know, commodity broker, and he was back then the Dow was, I don't know, under 1,000. I forgot what gold was then before the bull market. I think it was before the bull market that peaked in 79, but that happened.
Yeah, I mean,
Gold,
in the
yeah,
70s, it was around half to it spiked all the way down to 0.2. That was like
yeah,
just below 0.2, and we're at 2 right now. So if
yeah,
we have a repeat of that, you're talking about gold outperforming the S&P 500 by tenfold, right?
yeah,
I mean, that
yeah.
I'm not saying that is exactly what's going to occur, but I will put my neck out and say it's going below what it did in 2011, which was like 0.7. So to see gold
Okay,
get to 4 times the price of the S&P 500 is not something out of the question. That's something that can happen. To see it
okay,
happen 10 times the value of the S&P 500, that would be a repeat of the 1980 spike. And, you know, it's
yeah,
possible, you know, that's totally possible. But the issue I think is that, you know, the powers that be in the United States, they know that the vast majority of investors are stock, you know,
yeah.
they're really heavyweight in stock market. And so it's more or less an issue of national security to keep the stock market nominally high and keep the perspective that the stock market is a great place to store your value. So they're going to do whatever they can to keep that price, that nominal number high, so people don't flee from it too quickly. So my expectation is, yeah, the guess of the meeting of parity around 3,000 is probably conservative. It's probably right, but you know, it could take years for that to occur. So we got a
Yeah.
long time, I think, still to go.
Okay. Anything happening out there geo-wise that you have your eyes on that could affect
Yeah,
values? What are you
I
worried about?
you know, not necessarily worried, but I just think, you know, keeping your eyes on the fact that there's been huge amounts of physical gold and silver taken off of the COMEX over the last few years, pretty much since the COVID 2020 ramping and the double counting of the ETF 400 ounce bars on the gold side to give the perspective that COMEX had all this inventory. Basically,
Yeah.
what's been happening is that you have a lot of registered and unregistered piles that have been going out of the COMEX, both in silver and gold. In gold, they've almost halved. I mean, at the peak, they claimed 40 million ounces, and now it's just around 20 million ounces. And that's just a matter of what, 3 years or so that's occurred. So to see the COMEX and have gold continue to fly out of its warehouse, and silver, same story. And the ETFs, that's more or less what's been happening, is that there's been a lot of Western ETF sellers over the last few years. And a lot of that gold that's gone out has ended up going to central banks who've been buying it at record clips. I mean, this year they're probably going to get over 1,000 tons again. And that's 2 years in a row of mega-sized central bank gold buying. And they, you know, they're buying 1,000 metric tons is basically like a fourth of all the new mine gold supply and refined gold supply per year. So they're already admitting to taking about a fourth of annual supply. And that's just what they're admitting to. I don't know. It's possible that there's central bankers who are buying
That's only
and
what we
having.
know, right? I mean, there could be
Exactly.
a lot, right? Covertly.
Completely.
Yeah. You know,
So
go ahead,
go ahead.
James.
No, that's it.
No,
Go right. Go ahead.
all right. So a lot of people have asked me, and maybe you could answer it. I know it's not your specialty, but why have the physical markets outperformed the miners?
Yeah, that's been going on for a pretty long time, and you know, the last handful of years or more. And you know, there's some charts I have on my Twitter page that reflect that, and that's not just in the United States; that's around the world. That's in Australia. That's in a lot of other countries as well. Basically, you know, the way that I've been explained by other people who've shown me charts that illustrate this, that pretty much everything went to the wayside for miners since the 2008 global financial crisis. And the argument is that hedge funds, they like to go long gold and short the gold stocks. And so you have a consistent, persistent hedge fund shorting of miners, and they also go long on the COMEX. And that combination has been deadly for people who have been long miners. And in a Kondratiev wave, which is basically the final wave of a dead super cycle that we're in, which is like the
Yeah.
winter, Kondratiev winter, basically you have physical gold. It performs much better than miners do. And if you look around the world, I mean, miners, depending on the jurisdiction, are very risky. I mean, I live in Panama. We just had 2 months of shutdowns and indigenous going crazy about the mine for copper, and they basically shut down that mine supply. So about 1.5% of global copper supply just went offline, and that mine is going to be shut down and mothballed. So if it can happen here in supposedly tranquil Panama, I would suggest it could happen almost anywhere. And so,
That's a great point. There is a land grab. There are land grabs by governments.
Yeah, I mean, look at
these companies put in billions of dollars to develop their mines. They want them, or they're taxing them a lot for them to keep operating.
Yeah, like for instance, when Russia invaded Ukraine, I had it wasn't a huge amount of money, but I had some money in one of the major gold mines in Russia, and the United States government said, okay, you can't trade those stocks anymore, and they're going to be held by the U.S. Treasury. So I don't know when I'll ever be able to liquidate that mining share. It could be years from now, but I mean that's the type of risk that you have if you're holding in a jurisdiction that gets deemed unworthy of trading by the U.S. Treasury, or if you're in a country where all of a sudden the locals use, social media. That's the other thing, is people don't realize how quickly things can escalate with social media. So if there are people getting angry about something, social media helps spread that anger very quickly, and all of a sudden you have a shutdown and months of not having gasoline and not having gas, and that was kind of what I lived through the last few months, and the country just was not working economically for people, and they acquiesced and shut the mine down. So that can happen anywhere. I pretty much would argue, unless you're living under a pure dictator regime where they use violence to the ultimate ends. But Panama is not that way. They're pretty peaceful, and they didn't want to have blood in the streets, so they acquiesced, and that mine got shut down. So to me, what I would suggest to people who are long mines and such is only put the certain percentage that you can afford to lose or get tied up. I would suggest that you stick with majority bullion, because it's already outperformed mining stocks for the last 15 years, and it probably will outperform mining stocks for another 5 to 10. Generally, like in the 70s, gold bullion and silver bullion outperformed the mining shares until after the peak. It was only until 81, 82, 83, 84, 85 that the miners outperformed bullion. And so my suggestion is we'll probably see similar, where you'll see gold and silver spike in a mania. And at that point, if you want to gamble in some mining shares, that might not be a bad time then to start playing in that market with some capital that maybe you can afford to lose and gamble with. But that's generally when they outperform bullion, is after the peak.
Okay, so here's James' YouTube channel, and getting some nice views, and he does
every
reviews.
week. Every Friday, I generally will do a 10, 15-minute synopsis on what happened in the market that's really bullion related, gold or silver, but we focus on other things as well. And I try and curate what's the most important information that I kind of saw that week, and distill it down into a format that doesn't take too much of your time. And I try and give you a lot of charts and data and information that's fact-based, not just opinion-based.
Look at this guy. You look like you should be on, I don't know, Fox.
No, thanks.
Anyway, James, it's always great to talk to you. You want to wrap it with, do you have a comment on what's happening in China? And do you keep an eyeball on them, since they are a major accumulator of gold, that, if there is some kind of, bad recession, or I actually saw that one of their property funds actually made a payment, surprised everyone today, Evergrande or one of them. Do you worry about China ever needing to liquidate some of the gold they've accumulated?
Not really, because they've been accumulating this 21st century, and a lot more so after the 2008 global financial crisis. I'm pretty sure Tim Geithner went over there in 2008 on a trip, and it was an official trip that he went over. And I'm pretty confident that at that point they negotiated with Geithner that we're going to get out of some of our treasuries and hedge it with gold bullion. And is that okay if we start to buy gold bullion and move out of treasuries? And I'm pretty sure Geithner gave him the green light to do so. And And from there on in, China has been accumulating consistently gold from ETFs mainly and from other places as well. But they are the one, besides India, they're the largest importer in gold in the world, and they're also been the largest miner for the last dozen years or so. And when you actually back out all the data, I mean, the amount of gold that's gone in physically that we can trace using import-export data and exchange data, I mean, like over 30,000 tons have gone into China, and they don't export gold physically out. It's illegal to export gold out of the country. So they are a massive hoarder of gold. A lot of it's sitting with the private citizens, but I think a good amount is undeclared yet that's sitting with their sovereign wealth fund and military and other what have yous. Places that when they want to, that when it makes sense for them, then they can declare it officially if they so choose. They have been declaring every month on month for the last year and month or so. Consistently every month they've been declaring more official gold. And if you look at the amount of gold that they officially have been claiming to add to their official supply, it matches what Russia has basically done in the 21st century. So I think the two have been kind of coordinating to do so together in lockstep. But at some point, I think both of them are going to be more aggressive about how much official gold they really do own, because behind the scenes, I think they have more than they declare officially.
Thank you so much, James. Great to talk to you. And, you're a metalhead, and I'm not talking about rock and roll. You need
Right.
to follow James and hear what his thoughts are and what he's sharing with his community. And it'll keep you on the right track. It's definitely, not hype. Guy lives and breathes it. And really was great talking to you again, buddy.
Great to be with you, Dale. All the best to you, the listeners out there.
Yeah, so happy holidays, and I hope you have a great 2024, buddy. My trading warrior brother, James Anderson. Everyone.
Thanks, Dale.
All right, buddy. So that's a wrap. You could join the team in 20 minutes on the Morning Edge. Don't just count your coins and bars and Bitcoin. Count your blessings, and see everyone tomorrow. Good luck with the Fed later on.